Hello, my name's Ian Stewart. I'm Chief Economist at Deloitte, and I'm going to take you through the results of the third quarter survey of Chief Financial Officers. We've been running the survey for 6 years, and this survey is amongst the most positive we've had. Optimism amongst CFOs has risen close to a 3-year high. We've had 5 consecutive quarters of rising confidence. And what we're seeing in this survey is really a sharp decline in perceptions of economic and financial risk in the global economy amongst chief financial officers. In particular, CFOs are much more confident that the single currency will hold together. In 2012, that was a central concern for CFOs. It's diminished considerably. That's all led to a rise in optimism, but also in risk appetite. CFOs are bullish on taking risk. More than half of CFOs, 54%, say now is a good time to take risk onto their balance sheet. That really matters because, in a sense, the key decision companies have got to make is whether they should take risk or reduce risk. And our survey suggests that risk appetite is at a 6-year high. So the question is, what does it mean for how companies actually run their balance sheets? And what we've seen in this survey is really a marked change in the strategies that corporates are using to manage their finances. The defensive strategies that marked the credit crunch and the recession, cash conservation, deleveraging, cost reduction, those have fallen out of favour with CFOs. And for the first time in 18 months, we've seen that the top priority for CFOs is expansion. So really quite a change in the balance sheet strategies being employed by companies. And I think we're in a world where big corporates have ample cash on their balance sheets. Our survey that shows that large corporates also have extremely good access to credit on very good terms. And pressure from institutional shareholders for investment is growing. Merrill Lynch, Bank of America recently published a survey which showed that the top priority for investors is to get the companies they invest in turn to spend on capital. So I think what we're going to see over the next year or so is a rise in capital spending, and I think the CFO survey, with this emphasis on risk taking and its shift towards expansion, is consistent with more spending from the corporate sector. So overall, I think this is a very bullish survey. One note of caution is that we did see in 2010-11 a strong rise in confidence, which was snuffed out by the euro crisis. So we're very aware how external events can knock confidence, but certainly for now, what we're seeing from this survey is a broad-based rise in confidence and really quite high levels of risk appetite amongst the largest companies in the UK.